This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
Alright, now to show you everything that can possibly happen, let's now look at example 3, where we're going to take Scylla, who, remember, we were dealing with in example 2, but in example 2 we'd looked at the year to December 2000. We're going to carry on with the same company, same T accounts, to the following year, December 2001. Now, if you want, actually use the same T accounts, but I think to avoid any confusion, let's open up the T accounts again. If you check back at the end of last year, we had a receivables account, and we ended the year with a debit balance of 74,000, and so of course we'd start this year with a balance of 74. We also had an irrecoverable and doubtful debts expense account, but at the end of last year we left a balance of 0. The total expense we'd moved to the income statement. Finally, we had an allowance for receivables account, and again at the end of last year we'd left a credit balance of 12,560 because on the balance sheet we netted off together. We took the receivables balance of 74, we deducted the 12,560. So that's how we finished last year, that's how we started this year. We're now going to look at what happened this year and complete the T accounts. And incidentally, I did say earlier, but I must repeat, there is more than one way of ending up with the same result. So if you want to do this differently, by all means do. But there's only one correct final answer. The expense in the income statement, the balances. The way I'm going to show you is certainly the easiest, the safest. Anyway, let's do things in order. First of all, let's play bookkeeper. And it says, during the year to December, Scylla made sales on credit of 261,000. Well, of course, sales on credit. You debit receivables were owed more, and you credit sales. I'm not going to open up a sales account. We're concerned here with receivables. We'd also received cash from customers of 238,000. No problem. Debit cash, credit receivables, 238. That's all the bookkeeper will have done. And so, at the end of the year, when we appear as accountant, what's the balance? The debit side is 335. I think the balance is 97,000. I better quickly check that. Yes, 97,000. So here we are at the end of the year, and if there were no problems, 97,000 would appear on the balance sheet. Although do note, we've still this balance sat on an allowance for receivables. It sits there all year. And of course that, in fact, doesn't mean very much anymore. That represented the doubtful debts at the end of last year. Well, we're going to have to check shortly should it be at the end of this year and make any necessary entries. However, look back at the example, and it says a balance was extracted, and on investigation the following was discovered. Paul had paid us 2,200 of previously recoverable debt, and so on. Well, although we'll have to read all of them. To keep things straightforward, first of all, let's go through and decide, are there any bad debts? Because if there are any bad or irrecoverable debts, they must be removed. And tick them as we deal with them, then we don't miss any. A. Paul had paid us some, well, we'll have to deal with that, and we will. But for the moment, all I'm looking for is any debts that need removing. B though, George. George, now remember last year he owed us 8,000 and we'd left it in receivables because he was doubtful. He still owes us the 8,000, so it's still included in the balance, but he's now irrecoverable. And so remove him. If ever you have an irrecoverable debt, credit receivables, 8,000. The cost of removing it, debit your irrecoverable and doubtful debts expense account. Same entry as always. If ever there's an irrecoverable debt, credit receivables, debit expense. So we've dealt with George. B, ticket. C, Anne had paid some money. Well, worry about her separately. We're looking for irrecoverable ones. D, Ringo owes 4,000 irrecoverable. So as before, credit receivables, debit the expense. So, those two I hope easy. Look for irrecoverable. Remove them. The entry's always the same. What else out now? With two unusual ones here. So before we look for any doubtful ones, let's look back first of all at Paul. Paul had paid 2,200 of his previously irrecoverable debt. Now if you look back to last year, in example 2, Paul in fact had been owing us 3,000. I'm not going to write up all the accounts again, you've got it before, but Paul had been owing us 3,000. It was irrecoverable, we'd removed it, so we'd credited receivables, debited the expense, and Paul owed us nothing. And so, Paul owed us nothing. He wasn't included in the 74,000. He's not included in the 97,000. Paul has disappeared. The trouble is, though, he's now paid us 2,200. And what should we do? Well, he paid us 2,200. So obviously we'll debit cash. We've received money. But where are we going to credit? We can't credit receivables because he doesn't owe us anything. Surely this is like a bit of extra income. Last year, in fact, had we known this was going to happen, we wouldn't have removed all his debt. We wouldn't have had such a big expense. We can't go back and change last year. Last year's finished. This year, it's as though we've had a bit of extra income. And although you could open up a sort of income account, in fact, we treat it as a negative expense. We should debit cash, credit, bad and doubtful debts expense account. I say a bit of income, or effectively a negative expense. Unfortunately, though, although that's what should happen, I'm afraid we've one extra little problem, which often happens, in fact, in real life and in the exam. If you look below F in the question, it said, note, the amounts received from Paul and Anne are included in the total cash receipts for the year of 238,000. We received money from Paul. It's included in that 238. Now it's understandable, you see the bookkeeper's been told every time a customer pays us, debit cash, credit receivables. That's what they always do. But we've just seen that in fact that shouldn't have happened this time. We shouldn't have credited receivables because Paul didn't owe us anything. Debit cash, fine, but we shouldn't have credited receivables. We should instead have credited the expense. So in fact, we need to correct the bookkeeper's error. Included in that 238 is 2,200 that shouldn't be there. Well, we'd credited. To correct it, we will debit 2,200 and we'll put it where it should have gone. Instead of crediting receivables, we should have credited the expense account effectively as a negative expense. It's going to make our total expense this year lower than it otherwise would have been. So a funny one. If you need, replay this and make sure you're happy. But in fact, we need to debit receivables and credit the expense account. So, as I say, that is unusual, but it can happen, certainly in real life, and it can and has happened in the exam. However, we've now dealt with Paul. All of this was just to try and explain. But the other funny one, we've dealt with Paul, we've dealt with George, we've dealt with Anne. Sorry, I beg your pardon. The other funny one is Anne. Anne had paid her debt of 2,000 in full. Again, if you look back to last year Anne owed us 2,000 and was doubtful. So again, think about this. Because she was doubtful, we'd left her debt included in receivables. We hadn't removed it. We'd had an allowance for her, but we hadn't removed the debt. That 2,000 was included in the 74,000 at the end of the year. She was still owing us the money. During the year, she pays us. So what do we do when she pays? When she pays, we debit cash. And where do we credit? Well, since we still had her as owing us money, surely we credit receivables. And now she doesn't owe us. So for that one, no problem. Debit cash, credit receivables. That's what should happen. What has happened? Look at the note below item F. The amounts received from Paul and Anne are included in the cash receipts of 238. The total cash received of 238, debit cash, credit receivables. It includes Anne, and for Anne, that was fine. And so for Anne, we've no correction to make. Now you may be worried about the allowance. We'll worry about the allowance in a moment. For the moment, all I care about is getting receivables right, and it is now correct. Anne had been dealt with properly. We've removed the bad ones, we've corrected for the error with Paul, but now receivables are correct. So let's take the balance. The balance on receivables is $1,287,200. $87,200. However, our final job, of course, is although on the balance sheet we are going to put that 87,200, we need to deduct our allowance for receivables. Now it's this bit to watch very carefully. Always, whether it's just quick workings or whether you're writing it out in detail, before we worry about debits credits, let's work out what allowance we require at the end of the year. And we do two things. Remember, our receivables, the amount we're trying to collect, is 87,200. We say, first of all, does that include any specific problem debtors? So specific allowance. Let's read down. Well, A is paid, forget A. B, George. George was doubtful last time, but we've now removed him. He's not doubtful anymore, so he's not included. Anne, she was doubtful last time, but she's paid us. She's not included in receivables anymore. I'm not interested. Ringo's been removed. Mick. Mick, he is included still. He owes us 6,000. He's doubtful. And in fact, he's the only one. Those at the end of last year, George has been removed, Anna's paid. At the end of this year, the only doubtful one is Mick. In addition, though, we want our general allowance. And Note F says we're going to maintain the allowance at 4%. Well, we want it to be 4% at the end of this year, so we take 4%. We say, well, what were the receivables at the end of this year? After removing, after correcting, it was 87,200. However, included there is 6,000 specifically doubtful. And so we'll take 4% of those that we think are good. 87,200 minus 6,000. 3,248. And so, at the end of this year, we want an allowance of 9,248. We want to be able to deduct 9,248 on the balance sheet. However, look at your allowance for receivables account. There's already a balance there of 12,560. We know why it's there. We put it there at the end of last year, and it's stayed there ever since. Well, at the end of last year, that was correct, obviously. But that's now meaningless. It sat there all year. We don't want 12,560 at all. We want 9,248. And in fact, you have two choices. You either remove the 12,560 and then put in the figure you want, or easier is just to change it. Watch me. The allowance brought forward, or from last year, was how much? 12,560. And therefore, surely, the change required is the difference. And in fact, maybe we want the allowance to get bigger, or in this case, we want the allowance to be smaller. It's a decrease. We want to reduce the existing allowance by the difference of 3,312. If we reduce the balance by 3,312, we'll end up with the figure we want. So let's do it. Go back to our allowance account. There's 12,560 there. We're going to reduce it by 3,312. We therefore debit the allowance. We'll work out the balance neatly in a moment, but I hope clearly. If we debit with 3,312, we'll end up with the balance that we want of 9,248. Double entry? Well, decreasing the allowance is effectively saving us money. We treat it as a negative expense. The double entry always is to irrecoverable and doubtful debts expense account. Now, in fact, the entry could be either way. You see, we had a balance of 12,560. If at the end of this year I wanted a balance of 15,000, then we'd need to credit this account to increase it. And the cost of increasing it, the double entry, we would debit to the expense. Here, we want a lower balance, so we debit the allowance to reduce it. And the saving we're making, again, a bit like a negative expense, we credit the expense. Now we've finished. Let's tidy up the accounts. Receivables will appear on the balance sheet. We leave the balance there. Irrecoverable and doubtful debts expense. Well, the net cost of everything we've done, the debit side is 12. The missing figure is 6488. Again, there is the net cost, the net expense, and it'll go to the income statement. Although in any questions you do, almost certainly there will be a net expense. You'll debit the income statement. It is, of course, feasible, possible, that because of those negative expenses there, you could end up with the situation where instead of a net expense, it was effectively net income. No problem. It would still go to income statement, and you'd list it under expenses, in fact. But because it was effectively income, it would be like a negative expense. However, for the exam, that really is irrelevant. Any question you do, there will be a net cost as there is here. Finally, the allowance for receivables account. We had 12,560. We've adjusted it. We end up with a balance of is that what I wanted? I'd better check. 9248? Yes. A balance of 9248. A credit balance on the balance sheet under current assets. We deduct it from receivables. Receivables 87,200 less the allowance 9248, leaving net figure for the balance sheet of 87,952. And there we are. Now, of course, that example 3, the second year, is messy. In the exam, you'll never have all those funny bits in it, but there is everything that could possibly appear. Work back through it if you need. Otherwise, have a go at the test.